Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla, Elon Musk, Ark Invest, and Cathie Wood. In the first article we will be analyzing, it's titled, Cathie Wood says Tesla stock could soar 1,030% by 2027. Elon Musk says it's the best analysis he's ever seen. We'll also be discussing the next article pertaining to how Cathie Wood has bought millions of shares of a particular struggling company, which is a penny stock, but she is loading the boat on this company, so we'll be discussing that particular stock's future and whether or not it's a good and valid investment for you. Lastly, we'll talk about 3 other stocks that Cathie Wood is buying to add to her Ark ETFs that should be on your watch list as well. So for more videos on Elon Musk, Tesla, Ark Invest, as well as Cathie Wood, don't forget to go and annihilate that like button right now. That lets me know which videos you all want me to make more of. Don't forget to comment your thoughts down below on this amazing Tesla stock price target and what you think of Cathie Wood's analysis of Tesla stock. If you want to support me personally, don't forget to smash the subscribe button, and then right next to that is the join button so you can become a member to support me personally for as little as 99 cents, so you won't even feel it, because that's what keeps me here on YouTube. But without further ado, I say let's jump right into today's stories. Tesla plans to mass produce a robotaxi fleet by 2024, and Ark Invest is very impressed with Tesla's manufacturing capabilities and technology to actually get this done. That's why Cathie Wood of Ark Invest believes that the TSLA shares could explode in their overall share price. Cathie Wood is the CEO and founder of Ark Invest. Ark Invest is an asset management company that focuses on investing into very innovative and disruptive technologies in various companies. Essentially, Cathie Wood wants to identify very innovative companies early on before they become profitable so she can buy them for very cheap, but over the long term, they are set to explode in their overall share price. What catapulted Cathie Wood to fame is her identification early on of Tesla, and we all know that Tesla is a huge success story, which also increased the popularity of Cathie Wood and her investing style. Right now, Cathie Wood is still very confident in Tesla's TSLA shares and their ability to explode in their overall share price, to where Ark Invest has recently published their full-on analysis and valuation of Tesla, to where they believe the company could surge up to $2,000 per share by 2027, which would imply a 1,030% upside increase in the overall share price. Right now, the TSLA shares are trading at $180.14, so clearly Cathie Wood as well as Ark Invest and their analysts believe the company has a lot of upside left in it, and I will add my own personal opinion about this price target at the end when we go over their actual analysis. Their valuation model hinges upon robotaxis, specifically because Elon Musk, who is the CEO of Tesla, said that they are trying to roll out a robotaxi fleet to absolutely dominate Uber as well as Lyft. In a recent interview, Elon Musk discussed with CNBC that his full self-driving technology will be integrated into the robotaxis, and the more Tesla sells and the more robotaxis they make, it's going to increase their overall revenues. Ark Invest is betting that this is a huge success, and they are also betting that Elon Musk is accurate in his overall prediction. Tesla plans to build the robotaxis by 2024, and then from then onwards, it's just a matter of their manufacturing technology to scale that overall segment. Remember, Tesla is more than just an electric vehicle company. They also specialize in energy generation as well as energy storage, and now robotaxis in the future. Tesla is worth as much as the next 5 automakers combined according to their market cap, so clearly the TSLA shares are trading at a premium. But current investors believe that if they invest into the company now, not only will the current valuation catch up to their overall market cap, making them an excellent buying opportunity, but eventually Tesla will be worth substantially more than it is right now. The management over at Tesla remains confident in their ability to scale their overall technology, their manufacturing capabilities, as well as integrate themselves into newer markets. Especially as their full self-driving technology becomes even better, it's going to catapult the company further into profitability in the near future. Elon Musk said that robotaxis will allow Tesla to produce 2 to 3 times the original original value or sale value of the car in robotaxi revenue. So not only is Elon Musk going to get money from people using his robotaxis and paying for that service, but after these vehicles are used as robotaxis, he then can sell this vehicle to consumers. Enterprise car sales actually has a similar business model to where they rent out vehicles for 2 to 3 years, and then after that they go and sell that vehicle and then buy new models. So they can capitalize on their current advantages, particularly in manufacturing and technology, by 2024. Ark Invest specifically believes that their autonomous ride-hailing platforms for their robotaxis will generate $4 trillion worth of revenue by 2027 and $9 trillion worth of revenue by 2030. And of course, this is going to be worldwide, not just in the United States, hopefully. With that being said, Ark Invest outlines 3 scenarios. One is very bullish and positive, the other is bearish and negative, and one is in the middle. Specifically, for their price targets for the TSLA stock price by 2027, their bearish prediction comes in at $1,400 per share, which would still be an extreme win for Tesla shareholders. The company would multiply by hundreds of percent from now until 2027, making it one of the best buying opportunities on the entire stock market if Cathie Wood's analysis is correct. Their bull positive case believes the company could be worth at around $2,500 per share, and their intermediate case or scenario says that Tesla's TSLA shares could be worth $2,000. So for me, I think that the $1,400 share price is more achievable, but overall, I do think these numbers are quite inflated. Despite this, I do own Tesla, I'm going to buy more Tesla, and I do think it is a good long-term buying opportunity. On the other hand, Cathie Wood, in my opinion, is overly bullish on this particular company and stock, and I think she is overestimating the worth of Elon Musk's robotaxis. However, I do want to state that Elon Musk himself says that Cathie Wood of Ark Invest's valuation model of his company is the best analysis he's seen. Now, I just think this is hype that he is feeding into the system right now because, of course, him being the CEO of Tesla, he wants the share price to go higher, so clearly he's going to agree with Cathie Wood and Ark Invest to further inflate Tesla stock and specifically the price of their shares. Next up, let's talk about other companies that Cathie Wood is betting big on. Because remember, she did identify Tesla back before they were profitable and no one was really talking about them. Another company she is doing this with is called Ginkgo Bioworks Holdings, ticker symbol DNA. Ginkgo Bioworks essentially is a company that tries to program cells in the same way that we program computers. The company is a biosecurity and cell programming firm, and they reported $81 million worth of revenue for the first quarter of 2023, which actually represents a 52% downside from what the company reported in the same quarter last year, where they reported $168 million. This is why their shares have been falling. Ginkgo Bioworks is literally trading for only $1.33 to where they meet the criteria of a true penny stock. But despite this, Cathie Wood is buying more DNA shares. Ark Invest acquired nearly $5 million worth of Ginkgo Bioworks, ticker symbol DNA, and she added to her Ark Innovation ETF and her Ark Genomic Revolution ETF. For her Ark Innovation ETF, she added around 3 million shares of Ginkgo Bioworks, and she also added around 704,000 shares of this biotech company to her ARKG ETF. However, Ark is also buying other companies, such as Invitae, ticker symbol NVTA, where she added 300,000 shares to her Ark Innovation ETF and another 80,000 shares to her Ark Genomic Revolution ETF, as well as adding shares of Adaptive Biotechnologies, ticker symbol ADPT, and 110,000 shares of CareDX, ticker symbol CDNA. For me personally, I would rather buy her ETFs instead of singular companies she is trying to bet on for the future. Now remember, we have to keep Cathie Wood and Ark Invest's investing strategy in mind. She is trying to buy underperforming, innovative companies right now while they are cheap, such as Ginkgo Bioworks, trading for just $1.33. So in the future, over the next decade, they could boom and become the next big thing, and that's exactly what she did with Tesla. Although, even though she properly identified Tesla, that does not mean every stock that she identifies or touches is necessarily good. There are so many great companies such as Twist, CRISPR, Beam Therapeutics, and many other companies that have very exciting technology. But if you want to lower your overall risk, I would honestly just invest into the Ark Genomic Revolution ETF, to where Cathie Wood and her team is trading stocks for you. And the ticker symbol for that is going to be ARKG. So ARK, so ARKG essentially. That is going to be the one that you would want to invest into, as well as my other favorite ARK ETF would be ARKK. So it's ARKK. This is another fantastic, very innovative ETF, and I think these are the two ETFs that have the best long-term growth potential, depending on if you like Cathie Wood's investing style. Apart from these ETFs, you all know my top 3 favorite ETFs that have literally built me wealth personally, which would be VTI, so you get some fantastic diversification throughout the stock market. You have SCHD for those of you who like dividends, because this is the type of ETF that is going to be very favorable to own if you want passive income or during a recession or when the stock market crashes. Lastly, for growth, we're going to identify some technology companies in QQQM. Those would be my top 3 favorite ETFs right here. I personally own them, but if you want to have more risky ETFs, feel free to look further into the ARKG ETF and the ARKK ETF, also known as ARKG and ARKK from Cathie Wood. Now, what are some big singular companies that you may want to invest into singularly instead of buying these overall ETFs if you feel really risky, but you want very good upside? Besides Tesla, because clearly Tesla is going to be one of the best companies to buy overall that Ark Invest owns, we should also look at a few other companies in Cathie Wood's own portfolio. Right now, Ark Invest is hopeful that the Federal Reserve interest rate hikes will stop in the near future, which is going to invigorate investors to re-enter and reinvest back into growth stocks, meaning that we could experience a phenomenal rebound in the overall stock market. But one of the companies that are really interesting is Unity Software, ticker symbol U. It trades for only $29.10, and it's a major player in the gaming industry, with more than half of the entire world's video games using their overall engine. Gaming is a very high growth market and industry, and in the future we are going to see it expand even more aggressively across the globe. However, Unity's opportunity extends far beyond traditional video games to where its technology is even applicable in virtual reality settings and the metaverse. As demand for video games continues to grow, Unity is evolving, and they want to provide more comprehensive software services and tools for their developers to make even better video games. Like we said earlier, Cathie Wood is trying to identify very innovative companies early on, so they're going to be trading at ridiculously high PE ratios and PS ratios. So their accounting ratios, you are going to be buying the majority of these companies at a very steep premium, meaning that in the short term, the share prices could go further down. However, if you're betting on the long-term success of some of these companies, they really could pay off. For instance, in regards to Unity Software, their PE ratio, also known as their price to earnings multiple, is over 80 times, and their price to cash flow ratio is even higher. Ideally, we would want their PE ratio and their price to cash flow ratio to be lower, because that indicates that we are buying a company for closer to what it's worth. Now, what is good is that their price to sales ratio is only around 8, which is much more comparable and digestible compared to their technology peers. The price to sales ratio we would also want low, but for me, as long as you're getting a company below a price to sales ratio of 10, then it's pretty good, even though this company is extremely risky. More risky than other stocks that I talk about on this channel, such as Palantir and SoFi Technologies. And if you haven't seen our last video, we talked about how Cathie Wood recently has repurchased Palantir Technologies and added that to her portfolio, so it's amazing news. Overall, it's uncommon to see the sort of valuation premium for this type of business, which is experiencing struggling growth. However, the market is very excited about this type of technology, and Unity is trying to swing profitability and their sales around as soon as possible. The next company that I think is very innovative is Trimble. Trimble is well known for their positioning and navigation technology, as well as their powerful analytics tools. Their products and services allows their customers in agriculture, transportation, and construction industries to maximize their overall efficiency. It allows companies to deliver much higher gross margins and significant net income. The company also produced more than $200 million worth of free cash flow, and they are improving hand over fist quarter over quarter and year over year. Similarly to Unity, the price to earnings ratio is rather high, coming in at around 20. However, their price to cash flow ratio is also high at 27, so you are paying a large premium for both of these companies, meaning that you are taking on a lot of risk. For me personally, I would wait to invest into these companies, let it fall a little lower, wait for the company to prove themselves before you invest. However, that's just me and my investing style because I am more risk averse. Lastly, there is Bill.com, ticker symbol BILL, ticker name Bill, which trades for close to $100 per share. The reason why Bill is on this list is because they offer software for financial functions such as billing, payments, tracking, and expense analysis. This reduces the overall overhead of a company, and it really helps small businesses as well as large businesses improve their overall effectiveness and efficiency to create more opportunity for its founders. Bill has experienced phenomenal momentum to where its revenues grew by more than 60% year over year. This is how the company generated nearly $24 million worth of free cash flow, which is very impressive. However, like the other two companies, their forward PE ratio was cut in half to 64, which is still absurdly high despite the stock being down 60% from their all-time highs. However, for these particular companies, I would wait for them to get cheaper before I personally made an investment. Don't forget to annihilate that like button, become a subscriber of this channel for more videos just like this one, and of course, if you want to support me personally, don't forget to become a member by smashing that join button and supporting me for as little as 99 cents. It helps me out so much, and that's what keeps me here on YouTube. So with that being said, I will see you in the next YT video.